Hello, everybody. Again, this is Chet Mann. We are here live in our studio here on Hawkins Avenue. I'm with Agent Jay Dill, and this is CMG Financial, the home of CMG Home Loans, and we are not between two ferns, but we are beside two cacti in our ongoing series with Top Realtor Spotlight. And I have the pleasure of being with Justin J. Dill, who I've had the pleasure of working with now for almost 2 years.
Almost 2
and
years.
Jay has really hit this market hard. He's got a great story to tell, but Jay, before I go into it, this is the place where Zach Galifianakis between two ferns would say, "What the hell is up with Jay Deal? What's the deal today?" Or is it just short for dealer, Jay? I mean, tell us about yourself.
So born and raised in upstate New York. Came here by way of the Army. Joined in 2009, got out in 2014. Went to school at Columbia University. Went from there, did some finance stuff in New York City for a few years, and gave it all up to be a real estate agent.
So I really got to ask you, how in the world did you go from Wall Street to Hay Street in Fayetteville, North Carolina?
Oh, geez. Well, I had a friend down here. He had started a real estate team, and I was unhappy in my finance job, working 80 to 100 hours a week. So I said, I'm going to go work for myself.
And it's been a really cool story. I mean, Jay, you are a credit to hard work. I mean, obviously, I think you got a scholarship probably to Columbia.
Yeah, I did.
And put yourself through there.
Yeah.
Went through the military, learned some really big skills. Thank you for your service. I mean, I know you hear that, but you don't hear it enough. And then, you pivoted at some point and decided to get into real estate. Why real estate?
So I started as an investor, actually. Bought a few rental properties in the Fayetteville area. And as that grew, I realized that's where my interest really lied. So it's kind of a good mix between running the numbers on the finance side as well as like having the freedom to work for myself.
Yeah, true, and it's worked out well. How would you describe yourself? I mean, I see you as pretty hard charging. You definitely know how to grind. You know how to get it done. I think that's from some of your previous work experience, training, and just your personality. But how would you describe yourself?
Definitely. Hard worker for sure. Sometimes too much. My girlfriend tells me all the time I need to take a break. But 24/7. That's what we're here for.
So you don't have to answer it if you're too modest. But how many sales did you have in your first year?
Somewhere in the neighborhood of 80.
80 sales.
First 12 months.
First 12 months as a realtor, 80 sales. Which is pretty incredible. There are realtors that have been doing this for 25 years that haven't had 80 sales in 1 year. So congratulations to you on that. We were pretty privileged to be a part of a lot of those sales. So thank you. We've worked out a good team relationship here where we help that customer fit into the right box at the right time. Getting that customer in the right seat on the bus is so important, and it takes a village sometimes to do it. And Jay's been great about finding the right place and position to get a customer close, not only with the sale, but with the loan. And that's important to work together.
We've had some hard ones.
Yeah, we've had some hard ones, but those are the most fun because it's really very rewarding at the end of the day to put somebody into a home that was a challenge.
Absolutely.
I think. And then, of course, the ones that aren't so hard are great.
Oh, yeah. I'll take an easy one any day.
Absolutely. So where did you grow up, Jay? What city?
Originally upstate New York, small farm town no one's ever heard of, Waterloo, New York.
Waterloo.
Birthplace of Memorial Day and the birthplace of Tom Coughlin, the former coach for the New York Giants.
See, there you go. There's some famous people from Waterloo besides yourself.
Yeah.
And now you're living in southeastern North Carolina near Fayetteville, and you've done super good. So, tell us the markets that you like to serve. Is there a particular geographic area that you're in?
Yeah, so I started in Sanford, and I went from there. I started servicing Fayetteville, pretty much the Longleaf Pines and Triangle MLS, so call it south of Raleigh and north of Wagram, Siler City, and I've gone as far as Wilmington.
Wow, cool. Now, you do all kinds of sales. You do residential real estate. You've had primary residents. You've had people with second homes. You've had investors, and investors seem to be a little bit of a niche for you. Is that correct? I mean, you've got a great network of investment buyers, and I think you probably started investing yourself in rental properties and things. Tell us a little bit about that.
Yeah, absolutely. So I started as an investor, so that's obviously where my interest lies. Out the gate, And then from there, I kind of got into the community, other people that are buying. The more I learned, the more people I met. Started going to investor meetups. Have a couple dozen investors now. There's not too many former investment bankers running numbers for real estate investment, so it kind of gave me a bit of instant credibility in that community, and I've really just built on that.
Jay has a very distinct formula for how to make an investment buy work, and he's very good at it. Any advice for investment buyers right now with the rate environment where it is?
Absolutely. So with higher rates, obviously you would expect to see a corresponding drop in asset prices. We haven't really seen it yet. It's slowed a little bit, but you're still seeing a toppy market only at higher rates, which is affecting your cash flow. So what I'm telling people is, in the next 3 to 6 months, I'm seeing the turnkey investment business kind of going away. And it's going to go back to the value add that we saw, pre-2020, where you're going to be buying, rehabbing, then doing your cash out refi. Cash is going to be king for sure. But for the last, call it 18 months, it really hasn't made sense to absorb that rehab cost yourself.
Right.
Just because for every dollar that you're putting into it, that's 100% dollar that's out of your pocket. Whereas, if you're going turnkey conventional, in 20% down, it's only 20 cents on every dollar. Let someone else foot the rehab bill, give them their equity, and you still get a great cash on cash yield. We're talking 12 to 18% in some cases with a 20+% ROI once you count depreciation.
How's that compared to the stock market today?
Oh, I think it was down a couple hundred points again yesterday.
Yeah,
so
it's a tough time for equities, but
Yeah.
it's still a good time for real estate. Even in this market, I mean, our little saying right now is date the interest rate and marry the house.
yeah,
I mean, we're seeing a slowdown. It's a shift more. It's really more of a normalization, but of course, no one expected the inflationary hit that we've taken and rates to go as high as they have. But even in today's rates, we're still historically not that much above average. I mean, 7% was our best year in 2005. We're not quite at 7% today. I don't think we're going to stay here long. So our advice with Jay's clients is, if you love the home, and I think you would agree that even in the midst of where we are now, home appreciation is probably going to continue to be a good thing. Would you agree to that?
I agree. Theoretically, you'd expect, like I said, asset prices to fall as rates rise, but what a lot of people aren't accounting for is it's never going back to 2018, right? You're going to end up in a mid-range rates market or higher range rates market, but you have a lower floor for your asset price, or a higher floor for your asset prices. So these even sub $100,000 houses that we were buying in Fayetteville in 2018, they're just not going to exist again. Not in turnkey condition.
Right. That's a good perspective. And our feeling is we're probably going to get a chance to refinance the whole world that bought in 2022, or at least the second half of 2022. We just feel like we're in a recessionary period, and that's been traditionally very good for housing. Recessions have been good for housing.
Yeah.
Typically, when inflation starts to come down during the recession, then you see mortgage bonds react accordingly, and so you see interest rates go down. Maybe not interest rates on credit cards and consumer products, but you've always seen, except for the Great Recession 2008, which was a housing crash, this is not a housing crash. We've always seen rates moderate, so we don't predict they're going to go all the way back down to 2.75.
Yeah, that would
which
be nice though.
Kind of crazy, but you never know where they could go. So again, date the rate and marry the house, because we think in 5 years that home's going to appreciate tremendously, whether it's your primary or your investment property.
Yeah, and I think that's exactly right. Even if we continue to see rates rise, there has to be a cutting cycle. That's the way it works, right? Whether it's second half of 2023, beginning of 2024, it will happen eventually. And then, correct me if I'm wrong, but I think it's 6 months you can refinance after 6 months. So, it's
exactly right.
If you take out your mortgage at 7% today, you could have you back at 5.5%, 6% by the end of next year.
Yeah, that's true. And if you use cash and you want to get some of the equity back, you could do a refi at that point in time as well. So all good things. Good perspective too. A market cut. I like that. Jay, tell us a little bit about, what advice do you have maybe for a buyer and a seller in today's market? Especially the seller who might say, I don't think I want to sell right now. We've got this product and supply and demand. What thoughts do you have on?
So inventory has definitely come back over the last couple of months. I think it's almost doubled actually. in our market anyway in the last 2 months. Other markets across the country obviously are different, but we're definitely seeing houses sit longer days on market. So just having realistic expectations for a seller. We're not at the height of the market anymore. You're not going to see appraisal gaps in the $20,000-$30,000 over appraisal. That was
probably a good
crazy days.
Yeah.
Where people are bringing so much cash to closing. We're seeing a lot more contingent offers accepted now. I think I checked the MLS yesterday and what was pending but contingent, and there was something like 10 or 12. And 3 months ago there was 0.
Wow.
So contingent offer being someone selling their home prior to buying the new home, and the offer on their new home is contingent on the sale of their current home.
So would you say then we're in a more normalized market now, where do you have time to do an inspection? Do you get to look at the house before you make an offer now?
Absolutely. Whereas 6-7 months ago that wasn't the case. We were writing sight unseen offers. I had a listing. And I'll never forget it. It was wild. I listed a property and we had like 12 sight unseen offers within 24 hours. We never even showed the home, and it went for over ask price.
Yeah.
Not the case anymore, right? You have time. We're seeing 2-3 weeks on market come back to normal. 30 days is what I would say is a healthy market.
Mm-hmm.
If it's in turnkey, best house on the block, of course it's going to sell quickly, but for your average home, 3 to 4 weeks on market is very normal again. Whereas, 6-7 months ago, you had 72 hours at most.
Yeah, and I think that it's healthier for buyers and sellers. So it sounds like to me, you might be saying that it's not a bad time to stick your toe back in the water if you kind of burnt out trying to buy or sell a house 6 months ago.
Absolutely, on both sides, buyers and sellers. A healthy market is good for everybody, right? So right now, I think we're at least heading into what I would call a healthy market. It's not a buyer's market, it's not a seller's market. There's fair deals getting done on both sides.
That's great.
We're able to structure offers a little bit more to protect buyers' downside, while also still getting the best bang for your buck for sellers. So right now is kind of the sweet spot for everybody. Now as rates continue to rise, that dynamic will change, but at least as we sit here today, I think this is a very fair market.
Yeah, well said, and I think that's a good point. You also have built a little team, and we enjoy working with them too. Tell us about your company, your team.
I have. So as you mentioned, I came out the gate. I did pretty well in production side. In February, I broke off from my previous team and decided I was going to start my own team. Since then, I brought on a handful of agents. They're doing well. Again, they service a lot of the same areas that I service, south of Raleigh, down to like Wagram's area, side of the city to the coast. And we're just out here just trying to help people.
Yeah, and you probably are always looking for good realtors to join your team?
Absolutely, always. In fact, we're ramping up recruiting right now. Call me.
Well, I say that, because you can tell from Jay that he has a strategy, he has purpose, he's very driven. And if you're a buyer or a seller, Jay's a great agent to be with, because he is going to get it done one way or the other. That's what I like about Jay Deal.
We figure it out. Team effort.
He will leave on me at midnight if he needs to get something done. And I do like that. So you can rest assured that he's got your best interest in mind. He's not going to wait till Monday if it's Thursday to get on it. He's going to do it today.
And the crazy part is this guy answers the phone at 8 p.m. at dinner on a Sunday when I call him.
Don't tell everybody that. But I do answer my phone. Jay, how can people reach you? Tell us the name of your company. Maybe if you want to put out anything of how you can be reached.
Yeah, so the company's called JD Real Estate Advisors. We're brokered by EXP. We're an EXP team in the Fayetteville and Triangle area. You can just call me. My personal phone number is 315-427-4358. You got a rewind button there if you need it again. So
we'll put it on the screen down below.
Perfect.
When we finish this, yeah, we'll put all of his digits there where you can find him.
No late night text messages.
Now, Jay, we're beside two cacti here, so we got to talk about this. You've got a fast car. You need to slow down. You really need to slow down. I've had reports that they've seen this blue streak go by, and it turned out it might be you. I don't know for sure.
It was not.
We need to talk about habits. I know you're a busy realtor, and you've got to go see. Well, how many properties are you showing today?
Oh, today like 10.
All right, now
all the way down to Laurenburg from Sanford.
So the highway patrol is out there, and they're going to be watching. And fortunately, he doesn't have any customers in the car, but he will not be late to that appointment, I assure you.
I adhere to the speed limit at all times, give or take.
So do we like fast cars? Is that
I
part
do
of it?
like fast
Do you have
cars.
other hobbies or other likes?
I am a avid watch collector. You wouldn't know because I don't have one on today.
Watches,
But avid
okay.
watch collector, especially vintage stuff, chronographs from the 1940s, 1950s,
Wow.
Tissot's, Rolex, the works.
Cool. That's why he needs to sell real estate so he can grow his
Omega.
watch collection.
Yeah.
Omega.
There you go.
I like a nice watch too.
I think my Omega Speedmaster is probably my favorite watch.
Yeah, James
Yeah.
Bond.
Yeah.
Well, this has been great. I wish you the most success, continued success, Jay. His team has been great to work with. We've enjoyed having you beside two cactus, not between two ferns. We can't rip that off anymore.
Yeah.
But thank you for being here. Folks, if you're watching and you want to know more, just reach out and give Jay a call. If you're a buyer or a seller or an investor, I think you'll really enjoy him. He's worked with investors all across the country. I mean, from California to New York, all the way here to central North Carolina. But he also sells many of primary residence, a lot of veterans, a lot of VA loans. We've done a little bit of everything with JD Real Estate Advisors, and we appreciate it.
Yeah, I appreciate you having me.
Have a good day.
It's good to see you.
I'm taking this cactus.
Hey,
By the way.
whoa, no. Hey, wait a minute. What's he doing?